If you're a complete beginner and you find it so difficult to understand the candlesticks you see on the chart, this video is for you. If you have been in trading for a while now also, but you can't simply wrap your head around the logic behind the candlesticks you see, this video is for you as well. Hello guys, welcome to my channel, and if this is your first time stumbling on my channel, do well to hit the subscribe button and turn on post notifications so that whenever I post new videos, you'll be the first person to get notified. Alright, let's move on. So candlesticks are the language of the market. Alright, so it is just like basically before you can communicate with someone effectively, you have to understand what the person says. You have to understand the person's language before you can ensure effective communication. It is the same thing when it comes to the chart. When you come to the chart, you want to understand what the candlesticks are doing, the language of the candlesticks. Okay, otherwise you just be in the market and making decisions based on impulse, and impulsive decisions don't yield good results when it comes to trading. So the best thing you want to do is you want to understand really what the candlesticks are doing at a particular point in time, because if you are able to understand what it's doing, then you can be able to project where it is bound to go in the future. Because where we make money as traders is being able to determine where price is going to move during a certain time, and then we can take advantage of that and make money. There are two ways we can make money in this market. If the market is going up, we can be able to make money, and then when it's coming down also, we'll be able to make money. Now the problem lies in how to know if the market is coming down or is going up. If you know that, that is the only means you can make money. There are two types of the candles on the chart. Okay, we have the bullish candles and we have the bearish candles. If you're a complete beginner, what bullish means is up, and then what bearish means is down. So if the price is going up, we say bullish, and when it's coming down, we say bearish. Now you can see that in individual candlesticks. All right, so by default, the red candlesticks means the price is coming down, and the green candlesticks, as you see here, means the price is going up. So every candlestick you see on the chart has a particular time frame in which it opens and closes. All right, so if this is a 4-hour time frame we are on, it means that this one candle opened and closed within 4 hours. And if it is 5 minutes, it means it opened and closed within 5 minutes. So what this is, this thing you see at the top here, this is called the wick, and this is the opening price. It means that this candlestick, when it opened right here, went all the way down and closed right here. And the thicker part you see is the body, and this small stuff you see below and above is called the wick. So what is most important is understanding the logic behind it. So what happens here is that this price opened here at this area and then closed here. Now what this wick means is that at a point in time, price went up to this area and then came down and went before closing at the down here. And when it got here also, it went all the way down here at a point in time before reversing to the upside to close. So when we are dealing with bearish candles, it means that price opens at the top and closes at the down, because if you remember, bearish means the market is coming down, so it opens at the top, closes at the down. When you come to bullish candlesticks, price opens at the bottom and then closes at the top. Those are the main things you want to know about these candlesticks. Next up, candlestick patterns. Those of you who don't know what candlestick patterns means, it means a couple of candlesticks that are put together that tells a unique story. There are hundreds of candlesticks patterns, if not thousands, that are available, but for the sake of this video, we are just going to look at a couple of them that I use day in, day out on the market. Example number one is morning star and evening star. So another one is tweezer top or tweezer bottom. Tweezer top is the opposite of tweezer bottom. Another one is engulfing candle. So we have bullish engulfing candles and bearish engulfing candles. Another one is three line strike. Now all these, we are going to look at all of them one by one on the chart, and you get to know them in real life, what they look like and what they actually mean. First off, let's look at morning star and evening star. If you look closely, we have a bullish candlestick, another bullish candlestick, another bullish candlestick, and a bearish candlestick. Now what this means is that we have a buying momentum, which when you look at this particular candle is bigger than the rest of the candles here. So we have a buying momentum, and then what happened, we saw another buying candle, but then this time these two buying candlesticks are smaller than this one. So this means that the momentum that started from here to the upside is getting exhausted. This red candle shows sellers in the market, but if you look at the buying pressure that came in, this candle alone is not strong enough to indicate a full bearish signal. So what then we look for is another candlestick in a selling direction which is bigger than this entire move. So what this essentially is we have a buying momentum, and then we start to slow down by seeing these small candles, and then we see a sell candle to the opposite direction. So this here tells you that the buying pressure from this place is exhausted, and then we might potentially start to see selling pressure start to come in the market. And so from this point onwards, you saw that clearly the market collapsed to the downside. How this works very well is when you incorporate this with a support or a resistance level. So if this was our resistance level, and then price traveled into our zone, and then we started to see this happening and this big engulfing candle, this tells me that sellers have stepped in this zone, and this zone is likely to hold, and so this will be a perfect place for me to enter for a sell in this market. The second example here is tweezer bottom or tweezer top. So what this essentially means is a candle in one direction, one candle in one direction. So this is a bullish candle, for example, and then we have another bearish candle. This means that buyers were in the market, and then the market got rejected immediately after buyers were in, and so sellers took control immediately. These two candlesticks you see here, they are the tweezer top. Now look at this very closely. You see that we have a bullish candle in one direction, and then a bearish candle that has overshadowed the previous bullish candle. Now you see that these two candles both have full bodies, they have big ass bodies, but the story here is price opened at the bottom here, went down a little bit, and then went all the way up and closed here. Now the second candle opened right here and then went a bit up, that is the wick it has created, and then we saw it collapse to the downside and also close pretty much here. So this means that the buyers who were in control from this point immediately got rejected by sellers, and so this tells you that sellers are strong and are present in the market at this point in time, and so that tells me price is trying to go down. Now of course you can't just trade these candlestick patterns every time you see them appear in the chart. That is not going to make you profitable. What will really make you profitable is incorporating this with another concept. So say a support or a resistance concept. So anytime you see a resistance zone and then you see a tweezer top formed inside the zone after price has hit the zone, then that will be a confirmation for you to sell to the downside. And anytime you see a support zone and then price hits that zone and you see tweezer bottom, that is a confirmation to the upside, and you want to jump in and then trade the market to the upside. Now the next candlestick patterns we will look at is what? Engulfing candles. So when you take a critical look here, we have, as the name depicts, we have a bullish candle and one strong candle in the opposite direction that overshadows the previous one. So you see we have this big candle and another one that overshadows this one. So that essentially is just the meaning of an engulfing candle. Just like the other ones, we have a bullish engulfing and then we have bearish engulfing. So depending on where the market is and your place of interest will determine which of the candlesticks to choose. If I have a resistance zone drawn and then market comes into the zone, and then next thing I see a bullish candle and a subsequent bearish big ass candle that is bigger than the previous one, that has engulfed the previous one, then I'll enter the market for a sell. The next candlestick pattern is 3-line strike. Now what this essentially also means is that 3 candlesticks in one direction and one big ass candle in the opposite direction that has overshadowed or almost overshadowed the last previous 3 candlesticks in the opposite direction. Now let me explain. When you take a critical look here, we want to see at least 3 candles in one direction and just one big candle in the opposite direction. So if you see, we had at least 1, 2, 3, and then we had this big bullish candle to the upside. So that is what 3-line strike means. Thank you guys for sticking around, and here's where we bring curtains to today's lesson. Don't forget to hit the subscribe button and turn on post notifications so that whenever I drop a new video, you'll be the first to get notified. Also, don't forget to share this video to as many traders as possible so that we all get a hold of these simple things to enhance our trading journey. Thank you so much and see you in the next one. Peace out.